Welcome, friends. In this series of fundamental analysis, today we'll discuss, first of all, mindset of an investor. There are different set of investors, or we can say speculators, traders, and investors are present in market as per their mindset and skill set. They trade or invest in a stock market. So let us understand with example so that it will be quite clear. Suppose RBI is about to have deliberations and announce monetary policy in couple of days. So suppose for last 4 or 5 monthly deliberations, they are increasing interest rate slowly. So different set of investors will react for this situation differently. Suppose investor A, what they will think, they may think that the RBI has increased the interest rate for continuously 4 times, 5 times. So now they cannot go beyond that. It is too much high already. So they will have to cut interest rate this time to support growth. And accordingly, the A type of investor, or we can say a speculator, takes buy call on option. Second set of people, they have back tested risk and they expect to die down this before announcement or by the time this happens. So they will see there is too much volatility and that is why premium is too much. So they would like to encash this situation and sell the option. Third type or C type investor or people, they see this is a small noise. It will keep on happening. Long term, it does not affect. Even if RBI increases interest rate, price of the stock will appropriate in couple of days or a week time. If a stock is value having some intrinsic investable grade, then it will continue its path. This small monetary policy will not affect. Even if market reacts and stock price tanks, he is ready to take fresh bet on the same stock, his set of stocks, and go for long. So here we see three types clearly. First type is called a speculator, who simply, as per their wishful thought, he deduced that the RBI cannot increase from here. RBI does not do anything based on wishful thought. They have data, they have inflation, they have growth, projection, everything there. And of course, they have mandate to manage inflation within 4% plus minus 2. So definitely they will try to do in that range only. What a wishful people think, it does not matter to them. So first set of people are a speculator. who is not having any back-tested data, and based on that, he is taking bets or trade. Second set of investor or trader, of course, have the data. Based on that data, he does. So this type of people is a trader. And third set of people, of course, is investor, long-term investor who makes money. So these are the mindset of a overall mindset. Generally, we can divide. There will be more types of investors. Now we'll see another aspect, the compounding effect. Suppose you have invested 100 rupees and CAGR return is 20 for 10 set of years. Of course, market does not move in parallel for same is 20%. Maybe somewhere it will be more, somewhere less. But suppose, for example, it is 20% over a longer period of time. Has been observed that index fund is giving 15%, 14 to 15% CAGR return. Of course, some years, hardly 4, 5, 6 years up to from 1980 to up to now, in negative. Others are all positive. Some are 4, 5%, maybe some 30, 40%. But overall, CAGR is 14 to 15%. Why? So, for example, if it is 20%, so what will be compounding effect? So here, if we see, we can see after first year, it will become 120. Second year, of course, 144. Third year, 172.8, 173. Then 207.4, 248.6, 296.6. So almost 300. So it takes to reach 300 in 6 years. But further growth we see little faster, and it is more than 600 in another 4 years. So this is the effect of compounding. The more year we spend with the same journey, its effect will be more visible and your return will be very wonderful. That is why Einstein says this compounding effect is eighth wonder of the world. The one who knows it gains, the who does not know it loses. Now, another aspect is, does investing work? Of course, investing work. If we have quality stock, investable grade stock in our portfolio, it will give wonderful result. So, so let us see what are the parameters of a investable. So first is management's background. In qualitative aspect, we see management background, the promoters, how much they are educated, what are the businesses they are having earlier, what are the journey, whether they have earned from some negative means or unethical means. So we see management's background, how the management is, whether their integrity level is high or no. Second thing, we see business ethics. So what sort of business ethics a promoter have? Whether they want to have profit in short for a span of time, or they want to have fair growth of the company. So business ethics is also very much important. First thing is corporate governance. How the promoter is having corporate governance, what sort of people is appointed as director, independent directors, and CEOs, main office bearers. And of course, this will affect overall corporate governance, whether appointed people are of integrity or no. Of course, it will depend upon promoters' background, how they are. Second, their business ethics. If both are of high quality or high integrity level, of course, corporate governance will be of high value. Fourth is minority shareholders. How the promoter or overall management deals with minority shareholders, whether they take care of their interest or they take care of own self-interest first. If management is taking care of minority shareholders' interest, then of course it is a good company and we as a minority shareholder must invest in such quality company. Another is share transactions. Usually company buy their own share and sell. So whether they are selling their share when it is expected to stock not doing well, being insider, they have information this quarter it will not do good or coming days. So in advance they sell. And when they expect to give good result, they purchase in advance so that they can get benefited. If such transactions happening, we must be away from such stocks. Sixth point is related party transactions. As we have seen in some of the companies, they have related party, their colleagues, friends, or even family members or subsidiary. They transact and try to get profit, try to appropriate money through interrelated party transactions, as in seen in the case of Mirza International earlier. So we should be away from such company where such practices is prevalent. Salary pays to promoters, whether salary paid to promoters are in line with profit increasing or they take enormous salary, huge salary, not justifying with the company profit, company growth. We have to see if they are in sync with company overall performance growth, it is good. If it not matching, then we should be away from such company. Another point is operator activity in a stock. Whether promoter is allowing operator activity or there is too much speculation happening in a stock, then we should be away from such because operator can hijack the prices and we might be in trouble if we are going with such. Again, shareholders. What sort of shareholders company have, especially if more than 1%, whether they have good shareholder, FIIs there, DIIs are there, or all are minority shareholders only. So if more are of DAIs, FIIs, or some good HNIs, of course, we should also have our share there. Political affiliation, whether management is having political inclination or they are away from politics and concentrate on certain business. So we should away from if having certain political alienation. If government changes, that might affect the price of share. So we should also consider whether a promoter having some political connection or no, or affiliation or no. Of course, last one is promoter lifestyle. If promoter's lifestyle is lavish and too much swing, like we have seen in the case of United States, Vijay Mallya, we should be away from such stocks. So these are the parameters we should look as a quality aspect or fundamental analysis. Of course, we will dwell upon each aspect in detail in coming videos. Now let us see quantity aspect of a share, how it happens, what are the things. In quantitative aspects, we have listed here 14. There are some more, but at least we should see these 14 aspects. First, in profitability and its growth, where year on year there is consistent profitability or not. If there is some consistency in profit and in the range of 15% and more, of course, it is very good. Another thing is margins and its growth, earnings, its growth matter related to expense, whether the expense is matching with growth, earnings, and profitability or no. How is operating efficiency? Whether company has pricing power or no. If pricing power is good, if company have capability to increase price of its products, it is good and we must invest them. Matter related to taxes, whether company is paying taxes in full or they are having some appropriation there, whether company dividend payout is consistent and in sync with profitability or no. Like cash flow from various activities, of course, it is very important. Cash flow is of too much importance. Debt, both short term and long term, we must see. It should be below 1%, then it is good. Working capital management, how it is, it affects overall operationality of a company. Of course, we need to see asset growth, investment, and financial ratios, different financial ratios. So these are the some key aspects with respect to quantitative analysis. Of course, there are more, and sector to sector also it differs. Of course, in coming videos, we will see. For example, let us see here. If we see a retail industry, we can see total number of store, average sales per store, total sales per square foot, merchandise margins, owned store to franchise ratio. These are important quantitative aspects. Whereas for the same oil and gas industry, oil to natural gas revenue ratio, exploration cost, opening oil balance, inventory, developed reserves, total production growth. Same way, if you are seeing this pharmaceutical or any other FMCG business or IT business, all have their own set of some quantitative aspects we will learn in detail in coming videos. So this is from this. If you find some value, please do subscribe to this channel and share with your friends and colleagues so that they can also get benefit out of this. Thank you for watching. Thank you. Bye bye.